Hi, it's Arjun here from InvestorKit Buyers Agency, property researcher and buyer's agent. And the purpose of this video is just to really take you behind the scenes of what research can do for you and what is property research. Now, every single investor will do things differently. Some will have a full blown out approach like this because it may be their full-time profession, what they absolutely prioritize as their number one key activity. And for others, it may just be a couple of fundamentals. But really, what's this about is to take you behind the scenes in the research that I do, talk you through the core elements, and I've tried to best summarize it within one page. Now, this research exercise is occurring daily because it's not just one thing that I do each day. It's basically a component of this research that I'm trying to tackle each day. Sometimes I get a lot through, sometimes I'm just doing one thing and scheduling it out. It really depends on what's happening and what's out there. But essentially, what this document is doing is all the core steps that I take to guide me through locations and regions. Now, it starts off macro, and I prefer SA3 regions, which is an ABS classification, but in the simplest form, it means a cluster of suburbs, just very simply put. That's to reduce data volatility at a suburb level, which you can see quite often, but also to reduce, going too macro at a city or even LGA level. Now, some SA3 regions do cover off a city in some of our regional locations, but then you can take it more micro. Now, when it comes to property, everyone's always looking for that magic thing, that one statistic, that one driver, whether it be jobs, whether it be population growth, whether it be, economic performance. Everyone's saying it's that one thing that drives it, whether it's capital city or research. I don't believe it's true. There is no one thing that drives it, although there are more, higher correlating indicators with price growth or price decline. There is never that one thing that does it. So what I want to take you through today is just more about the influences, the indicators of market, the different research and data providers out there, and what I personally look at is on this page, as well as how I look at price buckets with yield buckets, because this gets you clear on your purpose, your objective with each purchase. And by having price buckets and location buckets with yield ranges, it really puts you in a position to go, what type of locations will do what for you? Because there is no one location that will do everything, unless you're talking about a city, because there's many micro locations within it, but it's usually picking what fits right in your portfolio. Now, I want to start off at the bottom part of the page. This is the price buckets in SA3 locations. Typically you'll see a range of about 150K, which is quite common. And I also want to go through these three ranges in particular. Now, on the left, you have the 250 to 400K. You'll notice yields are at highest in this range. This is really when you can start to get some positive cash flow at a very, very good level, affordability, diversity, and please do never assume that you're sacrificing growth at this level. Because remember, the key thing about property analysis is relativity. You're not looking at price as a means of that's the growth it generates. You have to look at relativity, and I'll mention that word a few times as we go through this presentation. The next one here is 4 to 550. You start to be in both major regionals, smaller regionals, and capital locations with this sort of price point. And for this analysis, we're only talking houses. 4 to 5% rental yields. You'd be surprised to know, if you haven't done the breakdown of numbers, you can still achieve positive cash flow in that price bucket as well. 4% rental yields and higher typically allow you to be positive cash flow, even up to 90% interest-only loans. That's largely because of the way interest rates are, but it also depends on which location, outgoings, and the assumptions you're making for vacancy and repair. 550 to 700K, now you're definitely across your major regionals, larger land holdings, and capital cities. And most of your capital cities, including Sydney and Melbourne, will have pockets with this. Now, yes, I could keep creating bigger brackets, but why do I like this? You can start to see the yield start to drop off now at 3.5 to 4%. You can achieve more than 4%, hence the plus sign, but the 3.5 to 4% is the most common in this price range. And again, you'd be surprised to know that you can still be neutral or slightly positive, but usually this is at 80% lending or slightly below. Now, with regards to the next part, alternate residential and commercial, this is where things get a bit more active in a portfolio. Development deals, higher cash flow deals, duplexes, triplexes, unit blocks, and even boarding houses and commercial property. So when we're typically looking at locations, we like to look at these price buckets, and then what's not shown on this report, because this is for the purpose of the video, is what would usually be under here is locations that we give the green light, tick off, and are buying in, whether it be for a quarter, 6 months, or 9 months, depending on the buying window we see. Now, a window doesn't mean that it stopped growing and that's your reason to exit it. It can be one of two reasons: changing trends, which is that stop growing, or it can, which is the most primary reason, be a market's too hot. Now that's fantastic because you've really gotten into a market, you feel like you've bought in for yourself, or in our case clients, and then all of a sudden it gets too hot. Now for me, what does too hot mean? It means that on regular occasions I'm seeing a miss out of property, and that an example of why we're missing out is because there are due diligence boxes that we need to tick: macro, micro, presenting, letting people have that time to think about it, and then also going on the ground, reviewing it, offers, negotiations, due diligence, back and forth. Sometimes this can be all rapidly done in a couple of days once you've found the property, sometimes a little bit longer. And so if you see a common occurrence of missing out again and again and again, you're getting very close to exiting that buying window, because now it's starting to say that the mums and dads are out, they're in full force, they're wanting to buy properties. Probably a large amount of home buyers are also trying to buy properties, which is in turn pushing up that competition. Now the second part to knowing when the buying window's off is when on top of that first, you're also starting to get a very low amount of off-market assets, pre-market assets. And when they start becoming lower, agents care less about the relationship with you and they care more about the price online, attention, seeing many people show up to their listings, getting videos with a whole full range of people coming through. Some relationships still hang on because they value that ease of transaction without the full-blown campaign and still want to get their buyers or vendors a good price. But many agents opt to drop the relationships, take it online and go, see you later, this needs to happen. So when we start seeing two trends like that happen, it's good news from the fact that it's happening, but it's the news to say it's time to move on now. The last and final part to it, which is another small component, yield suppression. It's when you start to go into a market and there might be 4.5%, 5% rental yields, but as the time goes on, you start to only get 3.5 to 4.25. Now that's a big shift, but yield suppression is an example of people willing to pay more price, speculate for that property, even if they're getting less income, as they feel that it may go up further, or there's an appeal to the location. Now, if you keep having that yield suppressed, there is a chance for the rents to swing back, which usually occurs. But in many cases, take example, some parts of Sydney, where say Campbelltown had yields start sitting at close to 6%, just over a decade ago, you then start seeing yields come down to 3 to 4%, which means they create new norms. Now, when there's a new norm, another cycle can still occur where you see yields suppress once again, which happened in parts of Campbelltown, which is good news. But then at the same time, when too much suppression occurs, you don't want to be caught out and hoping that this is the new norm or not. You start to back off and let the market do its thing. So that's an example of some moments of buying windows and jumping in and out of locations and changing that. Now, price buckets, when you have too many locations, it's difficult to understand what's happening everywhere. So at any given time, it may be between 5 and 15 locations, depending on how spread they are across different buckets that we look at across different parts of the country. I'll take you through to the next part, research and data providers. Now, whilst we have our own internal research, we also interpret research. And I'd be very confident in saying that almost all these providers are also interpreting research of each other. So when someone goes, we're a research firm, or I'm a researcher, yes, they may have their own data, just like me. We have our own data, we have our own, source that we'll pull out and constantly analyze. But usually there'll always be some connection to each other amongst this list of providers. And with that being said, it means that yes, you can be your own researcher, but interpretation is more key than anything. Interpretation is simply going, what do you get out of it? How do you understand it? How do you apply it? And what's the effect of the decisions you make off the back of applying it, right? So I want to take you through just a bit of a flavor of the types of insights that I'm regularly getting from these different providers here, as well as our own internal pool of data. So the top layer starts with us, but in this first line is your pool of data. Example, CoreLogic for 3 or 4 grand a month has a trends file, and you can pull that, and each month you get all the different trends occurring across the different LGAs and suburbs and so forth. Very valuable data, something that's very popular there. Then you have microburbs, risk-wise, walk score, suburb trends. Essentially, most of these are either search or pool data. And so as a result, you can have files, or you can have reports, or you can have outputs on an address, and you're essentially interpreting it. Remember, interpretation of data is key. But the first layer is that pull, report, interpret. The second starts to become more macro. We're talking about key industry segments in terms of real estate institutes at a state level, a country level, councils. Over here, we're talking our core voices of influence in the market, as well as our industry professionals, sentiment surveys, certain data studies prescribed for certain campaigning or thoughts, but essentially you're getting more macro knowledge across here. Now the next is the property news and property researchers as well. Now the core thing about property news is you have a lot of action takers that sit under the bucket of the Recon, Property Observer, Smart Property Investment. What I mean by action takers, they're absolutely in love with investing, hence they're following it. They're all real estate nerds, and if you're by nerds, take no offense, it's a compliment, and they just love real estate, and whether they are just listening all the time, want to do something, they're inspired, or they're doing something, or they've done a lot and they're just keen to be in the game in terms of listening, a lot of insights come out of that as well. The next is your mainstream data in terms of news. Now, yeah, you can go, the media says this and the media says that. True, but let's flip it over and go, how many mums and dads actually follow the output of media? A lot. When you think of COVID, or you think of key events that have happened, when the media says this bad is happening, and that bad is happening, many people stop. And if they're all stopping, well, it's working, isn't it? It's influencing, isn't it? So we need to understand influence. You need to know what are the likely decisions that are likely to come off the back of media. You can agree, disagree, that's up to you. I have my thoughts as well. In many cases, I also agree and disagree. But the thought is they have reach, they have influence, it makes a difference. You want to know what's going out there. The next as well is university. Universities tackle major economic studies at many occasions. Regional Australia Institute, Piper, Urban Developer, again, more news on a macro stage. Usually it's not property specific for many of them, but economic trends and certain things that are emerging, very important to understand, and of course goes beyond property as well in terms of employment as well. Demographics, economics, again, core influences here, very, very macro, trends that are shaping, things to understand there. Search portals, and from the search portals you have to remember, yes, there might be a more micro because you're looking at property or certain data on property, but you have to also remember with so much user base, they collect data from your searches, what you're interested in, what you're thinking of. So behind some of their news and some of their insights is not just a random blog article. It's not just a random journo going out and typing something. there are insights within some of these areas that, you can start to read between the lines and start to see things happening, as well as some data points like online search interest and their own economists and so forth that are providing news. This next line, all about the algorithms, the fancy stuff, the fun stuff, the scoring, the scorecards, the trend analysis, the thoughts, the expert commentary. Very much enjoy this. We've got our own scorecards and scoring and algorithms as well, but at the same time, it's always good to see what else is happening out there. Then we're talking people who have what I would say is the most data in the country, from measurement, from census and ABS levels, from our RBA to our bank sentiment surveys who collect everything we're spending, accounts we're opening, very cash, and the use of cash is reduced, right? And so all these digital transactions occurring, it's happening through here, sentiment. And from that perspective, a lot of information is to be gained from here. Next is the large groups who are out there. Again, more economists here in research, but again, surveys. But valuation firms, they play a big role on the ground, getting it out there, purchases, seeing things. Their commentary, extremely valuable. So just to recap, we're talking industry news, macro research, we're talking the data pool, we're talking institutes, economists, demographic research, portals, the fancy algorithms, sentiment, bank surveys, the major institutions, valuers. This is the back room. What am I interested in? This gives you a bit of an insight. Let's move to the next section on the left. Market influences indicators. So, there are many things that can make a market move, but demand, confidence, supply. Demand, sentiment, supply, some may say, but essentially some may just say demand, supply, but how much is available or can be made available? What do people think? What do people want? Right? So very simple way to put it. Yes, there'll be certain people who interpret it in a certain way, but or certain people who've got their tune on what really makes up demand, and at the same time, it doesn't have to be this complicated. It can be as simple as just how many buildings are going up and how many people are coming in. But I would say that because there's so many micro indicators, you can't always make it that simple, and this is where so many different things come in. Now, when I look at demand, we're looking at jobs, overseas migration, internal migration, and by capital versus regional, we're talking about, capital city to regional, regional to capital. For example, the Regional Australia Institute developed a great study, a recent report called The Big Movers, and it highlighted some interesting trends. Sydney and Melbourne are having, every 5 or so years, a major regional city like the equivalent of Albury-Wodonga being created, just by the amount of people leaving those two cities to move to regional markets. Quite interesting, isn't it? Now you imagine a scenario where borders are shut. What could that be doing to that market with some supply coming on? And what could that be doing to regional markets with, taking that sort of inflow that they have always been taking? What does that do, right? The next is movers, stayers, tenure type. So think about moving from one suburb to another, people who are staying in a certain region long term, census to census, is their address changing? And tenure type, renters, owner-occupiers, outright owners, so forth. Natural population, births and deaths, major projects occurring, like large-scale, multi-billion-dollar projects, micro-infrastructure, the road, the plaza, the healthcare center, the little plaza upgrades. These things make a difference because you have to look at infrastructure not just from a job creation, but impact to lifestyle, health, recreation, and so forth, right? Relative affordability. Relative, I told you I'd mention that word again. Affordability does not mean cheap, and expensive or high price tag properties does not mean expensive. So the key here is relative. If someone's income levels are a great way to start, rent, mortgage prices, another great way to start, repayments on mortgages, debt levels, credit take-up, relative affordability is key. I've seen many cheap suburbs that are unaffordable, and I've seen many expensive suburbs that are very cheap. So you have to look at it from the locals there, not just your thoughts. Resources and the dollar, we all know the importance of the core fundamentals in economies. When you think of the resources, imports, exports, the global demand with where the dollar sits, tourism, people coming in as a result of that dollar, where they think is appealing and so forth. And I touch on that on import and export activity. Credit take-up and type, so getting loans. But is it for refinance, first-time earners, investors? That also makes a big difference. This is now a commercial term, cap rate acceptance. Give you a perfect example. There was a day where Bunnings and certain massive sales of industrial properties were yielding 5% plus or 10%, 11% for some industrial properties, but they've really come down to some even at 3, 4, 5, 6%. And even that 6 to 7 is the more common range for, say, your Brisbane market, but even down to 5 or 4. What does that mean by cap rate acceptance? In the commercial world, people are willing to accept less of an income to buy that asset because they see upside in other ways. Leases, security, industry movements, popularity, long-term trends. And so as a result, Bunnings is a perfect example. People have been paying such low yields to get a Bunnings because they think that they're not going anywhere, which may be the case. They're an absolutely well-run machine. And, Masters, they said goodbye to them. And that was a perfect example of the security from cap rate. But I'll just quickly highlight some major media, local media, word of mouth, searches, online searches, government policies, support, political environment and stability, corruption, safety, education, arrivals. This is going to be big. Yes, COVID, what's happening with the borders, but you watch with these two, post-COVID, we are going to see a population boom. Australia's always been very popular anyway, but we just got a whole lot more popular if we can continue our government support, our actions that we take, our togetherness, getting through COVID, which I have no doubt we will. I'm massively confident in Australia. Spending, employment makeup and security, makeup being part-time, full-time, casuals, the security that runs with that, specialized industry performance, emerging industries, innovation. These are about global trends, things that are coming up, areas that we can innovate in Australia and really take ahead. Adelaide's space innovation and what's happening over there is a perfect example. The cross industries, the jobs, the businesses, the commercial leases, the new buildings, the infrastructure spend, the PR that the premier's getting there, and everything that's happening to showcase that city, drive a movement of employment. That's an example of confidence. Global and cross-country trends, demographics and life stages. What does a 50, 60-year-old think versus a 30, 40-year-old? What's important to each other? Credit pricing. Do we really want to go get out loans when it's 10% or is it more appealing in certain percentages? So think about that. Supply, building approvals. What's going to come in? Everyone's looking at markets going, oh, that market's hot. And you review what's online, the search portals. But very few people take the time to roll up the sleeves, go a moment back, and go, what was approved? This is no forecast. This is fact. Building approvals is such a good way to look at incoming supply pipeline, because when you're looking at supply, people are just looking at, lots on market in real estate, not many people at an open home, lots of people at an open home. Supply demand like that is too much of a snapshot view rather than the future trend that could occur. No point buying in a hot location now if it's got a whole bunch of pipelines. Perfect scenario is when certain major markets in Perth, certain approvals in the pipeline are piling up, or certain Sydney units, constructions, vacancy rates changing. You could have known that a couple months ago, a year ago, 2 years ago from seeing the building approvals. Zoning and growth zones, they can be both good and bad from a supply perspective, depending on the asset you buy. If you're buying a house in a growth zone with zoning changes that may be likely because of its focus being placed, all these townhouses and units around you may make difficult choices for rental and so forth, but they also provide some positivity on the land values because of how much utilization of the land that's occurring. Land release, site consolidation. So site consolidation being, could you have multiple people come together to make a huge sale? Is that activity occurring? Has it happened there before? Could it occur? Are agents saying something like that's coming up? Does that mean many more people can now open up a whole bunch of development stock? Government stimulus. You could have a construction industry falling. You could have, the building approvals falling. Take the home builder for a moment. But then the government always has this fine balance to play between falling supply, increasing prices, and pressure on affordability and jobs. The construction industry means too much to Australia. So from that perspective, bang, we saw home builder come through and a lot of money being thrown out there. Rules and regulations. This is a constant seesaw. You make it too easy to build, it's likely that garbage gets built. You make it too hard to build, less gets built. So again, lots of stuff is about finding that balance between the two to get that perfect balance right. Dwelling preferences and makeup. So, makeup is how it is. How many 3-bedders are there, 4-bedders are there, 5-bedders. But preferences is also then by the sales volumes and the certain type that are occurring. Inventory levels. If you wanted to throw all this noise away and go, what's the simplest indicator I can take in real estate, and basically use that as a means of demand, supply, or short-term price growth that's ahead, this is the one here. Inventory levels is basically, if I gave you an example of, say, a suburb called Parramatta has 120 sales, just an example, the numbers aren't real here, has 120 sales occur over 12 months, averaging 10 a month. We could say that if there are 20 listings, there are 2 months of stock listed online, or 2 months of inventory. Now, if 2 months of stock is there's a high chance that a lot of it gets cleared fast, people sell fast, and pressure is on prices. Why? Because at a sales average of 10 per month, it's likely that the stock's gone in 2 months for everyone. Now you imagine that at 10 months of stock, 10 a month happening, 100 listings up, we're going to see prices decline, people reduce property prices, and all of a sudden that's a short-term forecasting tool that's very accurate and has a lot of correlation. So it's a very, very popular one, but again, it's a 3 to 6 month forecast for this sort of stuff because inventory levels can change as a result of these other things. Credit availability and speed, institutional and corporate level relocation. Now, example, we're seeing many massive corporations change their locations or open up new buildings. Think of the Northeast Adelaide when Datacom threw a whole bunch of jobs there. That market really picked up with confidence, unemployment rates, and all these different things. 1,200 workers, 1,000 workers going to certain areas. There's many other regions as well where constantly, if you're following the news, CBA now relocating to Redfern Technology Park, Australian Technology Park there. That region is going to change as well over the next few years because people work closer, they want to live closer to work, they think of all these different things, but institutional and corporate level relocation is also important to the potential supply that could come up. Now, those are the core heavyweights of moving indicators, not indicators, but moving influences of market. These things are the core things that shift your property markets. But then it comes down to how do you find what's happening, or what do you specifically look at? And this is when indicators come into the picture. Indicators are a great way to look at what may be occurring in that market and giving you that opportunity to buy or the directional movement of that market. But what's important to understand is you cannot just look at where it is today. You have to look at where it's trending, where it is today, and its relativity. Again, keyword relativity. If you're looking at these three things, I'll give you a quick example. Many of these indicators in Bendigo and Ballarat, strong. It looks good in terms of the, say, snapshot view. It's also healthy today. It's been coming along well, and it's healthy today. And then to give you an example of relativity, say if we take Bendigo's circa 1.8 to 2.2% population growth, depending on which regions, that's similar to Sydney. But many people won't pull it that. Like they'll just go, well, no, millions of people in Sydney, hello, it's a big city. Well, it doesn't matter. You have to look at it relativity. Are there the big bulging, unit blocks flying up everywhere in Bendigo? No, but they are in Sydney, right? So from that perspective, if it's 2% there, they've got to build houses for everyone to make up that 2%. Townhouses, it could be stronger, right? And so also, do developers come all over the place when there's, say, 2,000 people at 100,000 population? No. So you might have some lag in that supply coming on. but there's always developers coming into different parts of Sydney. And look, there may not be in certain areas too. So you see population, relativity, any statistic, relativity. Levels, this is key as well. You see something on the media city, and you go, well, oh, Sydney's falling, mate, did you see that? Or Perth is falling, Perth is rising, great market. Look, you have to get over this. If you don't have time to research, it's okay. But stop assuming that Perth did that, or Sydney did that, or Melbourne did that. They did statistically, but no one buys the whole of Perth. No one buys all of Brisbane. You buy a house on a street, in a neighborhood, in a suburb, in an SA3, or that's the just our data that we like to look at, in a council region, in a city, in a state. You can just keep going. But what I'm trying to say here is too macro makes no sense. Too micro, get too volatile. Top down, bottom up. You have to look at it from that perspective. Now, I won't go through all of these here. I probably paused along enough on this page for you to get a chance to check this out, pause the video, learn more about each. But you can just see here, there's a combination of many different things here that I look at to help me understand the health of a market. And so I hope this session's been valuable to understand the core research providers from different types of research tools, platforms that I look at, how the importance of price buckets and macro at an SA3 location or whatever you feel comfortable with is there. It enables certain buying windows, the drivers and influences of property markets, and the many micro indicators from trending, snapshot view, relativity, from macro to micro and back that you can look at. Now, I'm very limited to the questions I can answer. As you can imagine, this is a video that I've actually, for the first time recorded like this. And so from that perspective, it's important to note that to respect our clients and the investment they make with us and our IP, I won't be able to go into every detail of some of these indicators, but nonetheless, I hope you found this of value and enjoyed the behind the scenes of a professional researcher. Take care, and if you have any questions that I can do my best to answer where I can, like I mentioned before, I will. And if you've been wondering, well, Arjun, how long does this take you? It's a forever thing. It doesn't stop. We have to keep analyzing. Markets are constantly changing. Arjun, how much does this cost you? Well over $100,000 a year in annualized research spend across some of these people. Some partners take up almost half that budget with one or two of them. A few grand a month for just one of these people as well. So from this perspective, it isn't expensive, time intensive, and a heavy learning exercise as well from the interpretation. But the key here is that we're just trying to help people make better decisions, and I hope you can make better decisions listening to this or watching to this, and all the best, and hope you found this of value. Take care and talk soon.